Hello, welcome back. I hope you made some new and fruitful connections over workshop, but also over lunch. We have a new panel, so I have a new dress. You can see the topic. I had personally a very interesting lunch. I had lunch with Klaas, a researcher from Lund University. Klaas, where are you? There, great. You definitely want to go have a chat with him. He inspired me, so I thought, in the style of universities, let's do a small survey. A survey of the observant conference participant. How many, besides me, actually brought their own lanyard? Oh, what? No, okay, great, there you go. For the rest of you, it's said with very small, letters, I'll give you that. We at Mind Park and amongst the organizers seem to have a lot of these at home for tons of events and meetups that we've all attended. And somehow you can't really, some people throw them out, other people, keep them forever. So they thought it would be interesting to use it as a talking piece. So for those handful of people who was observant, thank you very much. Maybe there's a story behind the respective lanyards. Another excuse, basically, for going and saying hello to someone that you don't know. Good. Interesting lunch, check. Lanyard, check. Second panel, which is about the dilemmas of impact investing. And we have Karsten, serial entrepreneur and founder of Mind Park, to gather us through that. Please.
Thank you, and nice to be on a green stage. And I would just like to start by actually bringing up my panelists. So please, Ann-Sofie, Sami, and Annelie, and Mikael, welcome up. When we talked about topics to discuss in a setting like this, it was like, we need to talk about interesting things. And this is for me a very interesting topic. I've been myself involved in impact startups in different ways and involved in normal companies, normal startups. So having this, it's different with impact, but it's also been a lot of attention to that the last couple of years. So talking more about that, but talking about it as well in a setting of normal startups, I think is very important. So can't we just start by introducing ourselves? Like, who are you? What do you do? And have you invested, or do you do something with impact, and do you do something with normal? Mm-hmm. Please start.
Thank you. My name is Ann-Sofie Hörlin. I'm working as an investment manager at Almi Invest here in south of Sweden. My background as engineer and also a sustainable manager at an airline. I am a believer that we can find technology to solve our global problems. We have done some impact investing. I would say Gårdsfisk is one of the main companies that I'm involved with, and it's growing fish on land for farmers to be fish farmers.
Mm-hmm. Cool. Sami?
Yeah, my name is Sami. I'm from SpinTop Ventures, a pan-Nordic tech investment fund. My background is entrepreneur. I founded a company called Scalada that became one of the leading imaging technology companies for mobile handset manufacturers many years ago. Also, we focus, one of the more important things for us nowadays is, I'd say, more ESG, but impact is part of the whole system.
ESG, what is that?
Environmental sustainability, and basically. Mm-hmm.
Yeah, my name is Annelie Näs. I run a company called Näs Invest that has invested in a few companies. One of them is Joachim's company, Propo Sales, but also Ljusgårda, who does vertical farming. And I'm also on the board for the crowdfunding companies that have invested in Färsking and Taku Taku, which is also a bit of impact investments.
Yeah, and my name is Michael. I have a background as an engineer, and I have a PhD as well. I'm also an entrepreneur. My past startup was a startup called Cordy, which were doing AI for the emergency services. And now I am launching a climate tech startup studio, which is focusing on building companies in the climate tech space. And we're raising a small fund currently to get on with that. And I have a climate newsletter, if anybody's interested, weeklyclimate.com.
Exactly. So you come from deep tech to climate.
Yeah, exactly.
Interesting journey,
I
must say. And to start off, we will actually have another fifth person, another fifth person on the panel, but a fifth person saying hello from Stockholm. So let's see what she has to say.
Hi everybody, my name is Sara Wimmercrantz, and I'm walking around in the sun, which is a little unfair. It should be raining because I'm so sorry I can't be in Helsingborg today. Firstly, Stockholm is super overrated. And secondly, I think Helsingborg is just becoming bigger and bigger when it comes to opportunities for entrepreneurs and investors. And very much thanks to people like Karsten and also David Nilsson, who's building, they're entrepreneurs themselves, and they're building extremely good networks and possibilities for all entrepreneurs. Cheers for that. Karsten has asked me to talk about a few things, and I've chosen to talk about common mistakes that impact founders make when they contact investors. And one of them is that they have not thought well enough on how to become self-sufficient for real. Because if you really want to become huge within your field and make huge impact, you have to think about how you will be self-sufficient and how you can earn the money needed for your own future. So that is one thing. One more thing is that even impact founders have competitors. I never want to hear again that you don't have any competitors. Before every meeting with you, I will definitely have looked into the field, and I know that you have competitors. And if you don't have them already, they will very soon show up. Yeah, that was that. I have a question to the panel called Impact Investing vs High Returns. For me, there's not supposed to be a VS between impact investing and high returns. And how can we convince the rest of the world that the potential for high return is very much there within impact investing, especially in times where new innovation is needed for crucial fields within healthcare and also green technology. But we still have some work to do to convince other investors of the fact that it's not a VS, it is and impact investing and high returns. I hope you have a great day. I'm so sorry I can't be there. Follow me on Sara.Wimmercrantz at Instagram and send me messages in the inbox there. I always reply. Good luck today, everybody.
Our first question, I would say. So is there a VS between impact investment and high returns? Anybody feels that they want to?
Yeah, I would say no for sure. I mean, that's what we're basing our whole climate startup studio on. I can't see why there should be a VS there. I mean, it makes total sense that what creates an impact must also have a market value, right? But I think it's a matter of making sure that for some applications the job of finding a suitable business model and doing all these things that makes startups great can be harder maybe because it's markets in the developing countries and that sort of stuff that might be tougher to work with. But yeah,
you would say no.
I would say no for sure.
Yeah.
Yeah.
Go ahead.
Yeah. No, it doesn't. I know when I started looking into impact investing, you said it's going to take longer time and it's going to cost more money. But then now when we look into companies raising or funding money by IPOs, there is a lot of money wanted to invest in impact startups, and they are more successful there than the usual cases. So that's really interesting, and I also see that the companies are attracting talents in another way, totally another way. So I'm pretty sure it's going to be going faster, benefits. Actually. So.
Yeah, I think we have same answers, sort of all of us. But I think one thing about having a founder that is having an impact company is that there's maybe more passion, and there's sort of those companies can align better the vision on what they want to do. When you have the perfect alignment of the people, you have perfect alignment of your investors and sort of your customers and communities, that creates something that is maybe a bit harder to create in a company that is not impact driven. As you see, the companies that work really well, you have that alignment, but that sort of comes a little bit free from that. So I kind of like it, but fundamentally, in order for that type of company to work out, you need to have the business fundamentals. So they need to go hand in hand.
But then that's very interesting, because I think then one of the first things we kind of need to understand is, okay, what is then impact? Like what is impact investment?
Yeah, it's very important to say what it's not. It's not a company that gives you a good gut feeling. It's not a company that just avoid harm, because that's a responsible investment, but it's not impact. Impact, you have to have be able to measure what you reduce in, or what you support to the. I would say the SDG is actually good, the Sustainable Development Goals, but to the community, what do you actually contribute to?
Do you agree?
Yeah, I definitely agree. But on the previous question, I would also say that I think we need some new examples of like how impact investments are scaling, because if we're looking at like high return investments today, many of them are, it's data companies that have completely scalable business models. It's so easy to look at them and then compare them to impact investments. And I think in a few years we will have other examples that we can base this question on, because at its core, it doesn't have to be versus. But now when you exemplify, I think it still is a bit.
Yeah. And that brings me to, like we already mentioned, valuations. So impact, from my perspective, impact startups or impact companies are a new type of companies in that sense. They have a different focus. And how is it with valuation? Do you get a higher valuation for your impact startup? Do you get a lower valuation? What have you seen?
It's hard for us because we are early stage investors, so I wouldn't say it's such big difference between the companies in the beginning. But I would say, as you say, the KPIs, to compare them, what would be the valuation be in 5 years, what the expectations, that would be probably higher. But before we said, okay, maybe 3 to 5 times the money would be enough. But I think that is changing. So no, I don't see a difference when we enter, because it's such an early stage.
Do you see a difference later?
I mean, we come in at the later stage, and I mean, I think what happens with the impact the company that has that in their mind, that it, first of all, it excites us more, and that sort of leads into maybe traveling through the funnel faster, and us putting more value to certain parts of the business plan. But fundamentally, as you said, Michael, the company needs to sustain itself and needs to grow, and the funds that exist have both. There's an expectation on how much we bring back to the investors in terms of money, but there's also very much increasing expectation on how these ESG related measurements work out. So there's the LPs of today are demanding much more. So it's not that they are fine with low returns of capital, but that's not enough. They also want.
But if they need to choose, they will still choose a higher return on capital.
I think you have to ask the LP in particular.
We know that there's some in these rooms, so we can ask them later.
But I think that the key here is for the impact startup to make sure that there are two bottom lines that they're trying to manage, right? Like, I mean, the impact metrics that they have are aligned with the way they make money, right? Because if they do that, then I can't see why valuation shouldn't be higher. And at that point, actually, I read a book recently, and I'm totally blanking on the name now, but I can probably find it later. But that book basically said that, I mean, everybody, I mean, all companies in the world, all those that have that are like mission driven and has a strong sense of value, they typically end up being worth more money than companies that maybe doesn't have that. So I think that's very interesting. I'll try to figure out what the name of the book was, but
So the mission drivenness is built in that sense.
Yeah.
But one thing I'm seeing is that of course it's easy to talk about investing in impact startups if they look like a normal startup, but also do impact. Then it's like super easy, as you said. Then it's actually more exciting. It actually goes faster. But isn't the problem maybe that people who start impact startups, they might not be from Handelshögskolan, like no business background. They might not be from a technology background. They might be from another background, might maybe much more socially driven background. How do you handle that?
Yeah, but if you meet somewhere, well, if you have a social background and you want to make a social company, that is not impact, because you have to have returns if you're starting an impact company. But still, again, I mean, we are not expecting that teams coming to us know all the buzzwords and the right things to say. We can coach them, but they have to know what they are going to do and what problem they are solving and how to measure it, where do you find the measures, and that they are making a difference if you are going to claim the impact startup. But we're not that, I mean, we could say, okay, but you need a hockey stick in the end, or we can coach them in that sense. And
What do you others say?
I think it's healthy to have people from other backgrounds than Handelshögskolan or some university of technology.
guys.
Because and what I think what has happened, like when I started my company in 2000, the ecosystem wasn't really there in the same way. But now you can be from some odd place and actually find the ecosystem, find the right type of investors in the right place and the right type of advisors, accelerators, and everything. So I think that's just very good, and that's why. I think the early stage players are very important for these types of companies with people coming from very different world than you usually see. When we meet them, they have actually gotten off the ground a little bit. So then we can actually take the view on all the KPIs.
Yeah, and isn't it just like a matter of like the whole like team problem that you have, or really right, that if you have somebody with maybe not like a non-business or non-engineering background, that is a matter of like finding the co-founder. I mean, I used to run a small incubator at the Technical University of Denmark, and I mean there you have all these brightly skilled engineering students, right? But they maybe don't know how to build a business, so it's always a matter of like finding like the right business co-founder for all these different startups, right? So I think that problem is just like a part of like a regular problem of making sure the team of the startup is good, right? I think.
Yeah, it's also interesting to look at kind of like what leadership actually comes from, maybe not having that background. If you have a genuine drive to do a certain change and you don't have maybe the tools on how to do it, that can still be, maybe even a more inspiring leader and a more inspiring person to follow and to kind of guide in those questions. So it could actually be a strength.
I would say, I mean, based on my own experience with impact startups, I would say that maybe we see now the shift that was 20 years ago with technology, or like 30, 20 years ago with technology. Like you had technology-driven people who invented and built technology startups, and they struggled in the beginning. And they struggled partially because the business people in the VC world didn't understand the technology. They didn't understand, what are you guys actually building? Like, why would anybody ever use this and stuff like that? Isn't it the same now? But that maybe the VCs need actually the social-driven people to understand social or impact startups, because they're more socially focused often, I would say. Like you have this social, even if impact is about the climate, it's still this driving force is that to be good for the world in that sense. Is like because nowadays VCs have tech people. They understand the tech startups, and we've seen the VC develop a lot during the last 20 years when it comes to tech startups. But don't VC maybe need to do the same journey?
Good point. Yeah. Yeah, I give it to you. It's like, do you need it?
Yeah. Can you repeat the actual question?
Do VCs need more like socially driven people or more impact-driven people in their own teams to assess cases, to actually understand cases?
I think that comes to maybe the sort of more diversity question. I mean, it's kind of general answer is that the more diverse teams you have, the better your company performs. So that's really important that you find different types of people. Then the everyday work is quite analytical and sort of fits in some sense. If you're small, I mean, we have 4 partners and 1 investment manager, and there's sort of everybody has to be able to do everything. So that it's harder to make a super broad partner group with that type of scale. So I think it depends a little bit on the organization.
Yeah. Anybody else wants to?
Yeah, I think it's an interesting way to look at it as like, of course, that as you say, I mean, if as VCs they scale their capabilities within like doing tech due diligence and that sort of stuff. I think it's interesting to see it as kind of like a due diligence issue that you need people on the team as well to do that. That would make sense, but again, I'm not a VC, so I don't know.
Not yet.
Not yet. Soon.
I also think it's interesting to see the new VCs coming that are straight on impact investing. VCs, they are raising billions of dollars in New York and London. The Pope is actually investing in impact, and when the normal VCs are missing out of the good deals, I think that's
That's good.
That's when you know that you have to be on track.
Yeah, because actually what I feel is that a lot of times when we talk about impact investment, we actually talk about tech impact investment. And it's a little bit already here, like when you talked about it, it's like, yeah, we talk about impact investment, but it's very easily becomes this, as long as they're still normal and they can still grow and they still have numbers and they can prove all the normal things. And I think that we'll probably see a big challenge there in the coming years. But I mean, both of you have a deep tech background. So when you look into these kind of cases, is how important is the tech for you?
Yeah, I think for me, tech is like quite a big focus, of course. But I mean, that's also something to do with the team that we have currently built around our studio. But I think that, I mean, technology has, like, at least from like a climate perspective, it's like the biggest power in like making sure that we all decouple our resource needs from the planets, right? So in that sense, I think technology is very important. But with that said, it's also very, very clear that if you look at there's a lot to be done in like social context as well, that maybe not where technology solutions might not be the right thing. So I think it's an either or. I think it's just a matter of like focus. That both things, I think, makes a lot of sense. I know that's very consensus-based answer, but I think that is my answer.
When you look at cases,
well, I think tech is one parameter of the technology that is there, but I think the reason VCs like technology companies is that and particularly software-based companies, is that there's a scaling logic that just works fairly well. But we have, for example, a tech-based cleaning company that actually the core reason why they are the best in Nordics is that they have a culture, an awesome culture. So the cleaner is part of the product. They just love being part of that entity and just do amazing job, and therefore just gives those benefits. So it's not so there's a tech behind to make everything simple, but it's all about culture and giving opportunities for people to So it doesn't have to be tech.
No, I think also the scalability factor is important if you are going to fund your company by VC money. Otherwise, it's maybe not a VC case. So and therefore tech is one. We are investing in tech and also a lot of in life science. And you can always say all life science is impact, but no, but you still have to measure the impact and show it besides how many pills you're selling.
But do you see difference, like when you invest in, for example, life science versus when you invest in normal tech companies? Like, is there valuation differences? Are there expectation differences?
Well, it's very binary when you're investing in life science. Either you are going to succeed or you're failing. So that's interesting. But I can see also that life science often say that, well, of course we are impact or we are sustainable, and they take a lot of things for granted. And I think they should be more looking into the SDGs and try to find more, differentiate themselves a bit for the KPIs. So.
And I guess there is always also the challenge with being research-driven, maybe, for example, so like researchers who found a company see things differently, don't follow the normal trajectory of knowing the right KPIs up front and stuff like that as well. How is it with like follow-up investments? How, if you do an impact startup, will the follow-up investments be easier for you? Will it be harder? Will you have higher, like, will it be measured higher, or will you? Will it be
as
easier?
I said, there are a lot of money in this sphere, and you have the green funds that are, I mean, throwing money in an IPO and in a very early stage. I think it could be, and especially if you have the cool VCs with you, you have Norrsken and some other guys investing in your startup, then I think it's going to be, and of course, if you
so it's actually
measure the KPIs.
You would say more money right now.
I think it's more
if
money.
you impact. It should be
And
probably
it's
be
hard to
easier.
find the real impact as well. So.
Yeah, that's probably, it's increasing. Yeah.
I mean, you're a VCs, you're an angel investor, and you will start companies. But from a pitch perspective, how many impact startups do you see versus normal startups? Like, is it common for an impact startup to approach you?
I just came from the demo day in Malmö, actually, from the Impact Accelerator that have been driven. So all of a sudden I met 4 companies in 1 hour, and it was amazing to see where they have taken them for just 6 months. But normally it's a normal, sustainable, or responsible at least, startups, and maybe 1 of 10.
1 of 10.
Yeah, and when I started out, they were actually afraid of talk about the sustainability part because they were afraid of scaring off the VC.
It's not enough business.
Yeah, and that's the difference now. But still, I mean, it's sustainable, but they don't have the measures for impact. Most of them.
How's it with you, Sami?
Yeah, it's hard to categorize them. Maybe if it's impact or what does it actually really mean there, but. The companies whose fundamental sort of business model is about sustainability and helping the world in some sense, that increases a lot. And also, I mean, I think this summer we made 3 like more or less pure investments where that's a key parameter of the company. Is it impact or not? I don't know actually really how to define that properly, but the focus of both companies searching for money, I think VCs, and also the LPs that are funding VC is going very much to building sustainable future. And then some of those are classed as impact and some maybe not. It's hard to tell what the definition really is in my book.
I would say for those approaching me are not at all many impacts. I mean, they are tech companies, but I think also it comes to the kind of the passion of the person who is actually starting this entrepreneur. I mean, if you go into VC like we were in the previous panel, you see a certain like path for your company, and if you're really driven by something that is maybe, I don't know, bigger than you or something, maybe you aren't even looking for that kind of money because you don't want that to be the driving force in your journey. So I think like there are probably more opportunities out there than those are actually actively seeking capital.
Yeah, and Yeah, exactly. And it's also harder with capital. I mean, just currently in Sweden, especially in southern Sweden, you currently have a case of a big impact startup, if you want to call it that, Oatly, which has gotten a lot of bad press for their follow-up investment led by Blackstone, which a lot of people think just Blackstone isn't alignable for an impact startup. So you also have these kind of new things which hasn't been a case before. Like previously, money is money. The better the valuation, the better the money in that sense. And now we actually have, we actually need to check who's investing in our startups and stuff like that. If you prophesize, so we're saying we don't see so much impact startups right now. We've seen it increase, we've seen it already change. How, in a couple of years, in 3 years' time, or in 5 years' time, how will it have changed? All this money which is flowing into the scene now, will that have an impact itself? What do you see? Who wants to start?
Yeah, I think from like a climate perspective, which obviously is my part of the impact cake, right? I think that there's going to be a ton of climate startups. I think that climate is our tech bubble, or not bubble, not yet. Our internet boom, and then probably bubble later. But as always,
sooner or later.
But I think that for sure. Yes, I think there's going to be a ton of it, because it just makes a lot of sense. You can feel the what do you call it, like the waters roaring. You can feel like the political class is starting to step up, and all these different stuff happening, and more money is pouring into these things. And I mean also to touch a bit on your previous question. I mean, when we talk to potential LPs for our fund, I mean, everybody's very interested in getting a slice of the impact cake that we talked about, right? So I think that also when you have money coming in, you have political action, you have all different things, then it's just going to be, there's only one way forward. More. So I think there's going to be a lot in the climate space, at least. That's like,
So you're saying like there'll be a 10 times increase in a couple of years' time?
Yeah, I would say so.
Yeah.
I'm thinking on a more, I don't know, philosophical way again, but like if we're looking at what driving people, both to kind of invest and to start companies and to in general do things, I think that some people that actually invest in impact startups are maybe currently also doing it for their own kind of
conscious.
Yeah, exactly. They are maybe not driven by that. I mean, maybe the VCs are still a lot driven on, they need to create returns. So I think like in a few years' time, I think we will see different types of monies showing up, basically, that are like, what they want to do with the world is actually more creating the possibility to create impact, rather than, seeing us, should I invest in this company that is a scalable tech or an impact company, but more like we actually want to facilitate this growth and actually create new money just for that. And then I think it will be an even more rapid growth due to that.
So you also expect a lot of things to happen?
Yes.
But first of all, there's the trends. People are really aware of the sustainability issues. And that's why things are happening. But one if we go further back in the ecosystem, what happens is that huge amount of the, let's say, take European VCs, are actually funded by governmental money. There's a lot of governmental money, especially if you're a somewhat professional VC, you will have money from European Investment Fund. And then you have other institutions, and those funds have really, really high demands that we actually take action on these things. And the VC, you can't have a VC in the future that doesn't have this very, very high on their agenda, because there's no money for those players. And we're talking about sort of regular VCs.
Yeah.
So the regular VCs will be very, very sustainably aware. And then you have even more sort of green initiatives that happen at the same time. So that's going to make a huge difference.
Yeah,
that's why things
you're
are going to
seeing
change.
an explosion as well.
I absolutely. That's
no question
super.
about it.
That's very, very good.
Almi?
I could also, I agree on that, but I could also see that there would be some, not greenwash, but these big funds with the big bad boys investing in oils that need to clean their conscience. They are the ones starting up impact funds as well. That could make a difference. But I also think that's important for our investors to educate ourselves how to evaluate the company. Is this real impact, how do they measure? Is there risks? Are they actually doing a contribution, or is it just something that would be changed anyway? So we need to do more around educating ourselves, and I think it's. I mean, you have the 5 dimensions that the impact management project are actually launching. I think that's things that we could do quite easy and start to discuss it.
Okay, so just to wrap up the panel then. So what I hear is that impact startups have it easier in some ways because they can attract maybe talent easier and keep talent and all those kind of things. Valuation-wise, hard to say. Might be easier, might be harder, depending on how good they actually are at following the normal business cases. We might need to evaluate how VCs invest in impact. What kind of due diligence do they actually do? And we think that there will definitely be an explosion of both impact startups and money for impact startups. Great. Thank you so much for being part of this panel. Love to have had this conversation with you all.